If you're thinking about buying or selling in Austin, don't make a move until you watch this. The market has shifted in a way that could cost you thousands if you don't know what's happening. Homes that several years ago used to get 5 to 10 offers are sitting on the market longer and longer. But here's what's nuts. This isn't happening everywhere. Some neighborhoods are still red hot, while others are ice cold. And knowing the difference could save you big money on your next deal. By the end of this video, you'll see exactly why Austin's market is shifting, which neighborhoods are still worth the money, and how to use this market change to your advantage, whether you're buying or selling. Austin's housing market is cooling down fast, and the numbers show it. Home prices have basically flatlined after years and years of those crazy jumps that we had. Redfin says that the average sale price in Austin is around $555,000, which is up just 2.3% from last year, but price per square foot is down 6.4%. So people aren't paying more for the same houses, they're just buying different types of homes. When we look at Zillow's numbers, the average home value in Austin is down 6.8% over the past year to about $513,000. That's a huge change from the crazy growth we saw during the pandemic years. But here's where it gets interesting. Not all homes are feeling this slowdown the same way. The luxury market, especially in areas like Barton Creek, is still really strong. These high-end properties still attract wealthy home buyers who aren't as affected by interest rates. And when we talk about migration trends later, you'll see exactly why this luxury market is staying so strong despite the overall cool down. Meanwhile, starter homes and mid-range houses are seeing the most price cuts. The latest data shows that the bottom 25% of homes by price saw a 3.3% drop year over year, while the top 25 actually went up by 7.8%. It's likely we've got two completely different markets happening at the exact same time. Oh, and if we haven't met yet, I'm Shannon Schmitz with the Schmitz & Smith Group. I've been helping people buy and sell homes across Austin for many years, and I'm out touring these neighborhoods literally every day. That's why I create these videos, to share the real market insights you won't hear anywhere else. If you want to stay ahead of Austin's shifting market, hit that subscribe button down below. Trust me, knowing what's really happening block by block in this market could save you a lot of cash. Now let me tell you about something that's making an even bigger impact on our market than cooling prices. The number of homes for sale in Austin has absolutely exploded, and it's changing everything about how people buy and sell. The Austin Metro reached 16,993. That's a 5.3% jump from last year, and it actually marks one of the highest inventory level we've ever seen, I think ever. Within the city of Austin specifically, the increase was even sharper at 15.5%, with active listings jumping up to 5,770. If you've been struggling to find a good home to buy, suddenly you've got lots and lots of options. This shows that location matters more than ever. In fact, homes in Leander and Pflugerville are sitting on the market much longer than they were a year ago. In Leander, homes are now taking 74 days to sell compared to 54 last year. That's a 37% increase. And in Pflugerville, the median days went on market jumped up to 61 days from 49 last year. The months of inventory, basically how long it would take to sell all the homes on the market at the current pace, climbed to 6.37 months for the Austin Metro and 6.71 months within the city of Austin itself. That's a significant increase from last year. And in real estate, 6 months is considered a balanced market, not favoring buyers or sellers. This is a huge shift from the 1 to 2 months we saw during the peak when sellers had all the power. And get this, homes now sit on the market much longer than a year ago. That extra time completely changes how you can approach buying a home. This leads to something you might find shocking: the massive shift in power from sellers to buyers. Returning in the first quarter, Austin clocked in at 45.3% of home sales with seller concessions, up from 44.5% a year ago and just above the national average of 44.4%. That still puts Austin below the top of the leaderboard, which is Seattle, coming in at 71.3%. But Austin sellers are definitely more willing to deal than those metros right now. What this means is bidding wars have basically disappeared. Remember when every decent house had 5 to 10 offers? Those days are gone. Buyers have so much more room to negotiate, and contingencies are back. Buyers can now include inspection contingencies, financing contingencies, and even appraisal contingencies without fear of losing out. During the pandemic, people were waiving all of these protections just to have a chance at getting a house. Now you can actually find out if the house has problems before you buy. This is going to be super important important later on when we look at where Austin's housing market is headed in the future, because these buyer protections are one of the key signs that we're moving towards a more sustainable market, not a crash. What kind of deals are sellers offering? Money towards repairs, closing costs, mortgage rate buydowns, HOA fees covered for up to 6 months, and even appliance packages. Smart buyers are taking full advantage of this shift in power. Think about how crazy this is. 2 years ago, buyers were skipping inspections, offering $100,000 over asking. Now sellers are paying part of your mortgage. That's how much power has shifted. But before we get too excited about all this buyer's leverage, we need to talk about the big elephant in the room, still making home buying tough for many Austinites. While prices are cooling and buyers have more leverage, affordability is still a huge challenge for many Austinites. Mortgage rates are sitting around 6.5% for a 30-year fixed loan. That's down a bit from the recent highs, but still way above the low sub-4 rates that we were seeing many homeowners get during COVID. These higher rates mean monthly payments remain steep, even as home prices flatten or fall. If you got a mortgage under 3.5% and you move, you're looking at about $180 more in monthly payments per $100,000 borrowed. No wonder so many people are saying, I think I'll stay put. This rate lock effect is keeping some homes off the market, which is partly balancing out all of the new listings that we're seeing. But it's not just mortgage rates causing the affordability crunch. Property taxes in Travis County jumped 11.6% on the average tax bill for 2025. When you combine rising property taxes with Austin's overall increased cost of living, many locals are finding themselves priced out even in this cooling market. And speaking of who can afford to buy in these days, you won't believe how the migration patterns have shifted in the past year. The people moving to Austin have changed dramatically in the past year, and it's affecting our market in surprising ways. During the pandemic, we saw a massive influx from California. Tech workers with remote jobs were flocking here, driving up prices in neighborhoods like East Austin and South Congress. But that wave has definitely slowed down compared to the pandemic years. According to the U.S. Census Bureau 23 to 24 update, domestic migration to the Austin metro area is at its lowest level that it's been in the past 15 years, accounting for less than a quarter of population growth in 2024. This is a significant decrease from the roughly 60% average the area historically sees. Meanwhile, international migration is at an all-time high, helping to offset the domestic slowdown. Among domestic movers, regional sources now dominate. The most significant metro area contributors to Austin's net migration in 2023 were all local here to Texas: Houston, Dallas, San Antonio, and then a few from Los Angeles, San Francisco, while California's share has declined relative to those nearby Texas metros. Internationally, the largest new immigrant groups arriving in 2024 hail from Mexico, India, Honduras, and China, with smaller but rapidly growing communities from Taiwan, Venezuela, Cuba, and Colombia. The shift in where people are coming from is changing which neighborhoods are hot. During the pandemic boom, East Austin was on fire because it appealed to those out-of-state buyers looking for urban living. Now more affordable suburb areas like Pflugerville, Round Rock, and Kyle are seeing a stronger demand from regional movers with tighter budgets. Now this migration shift is creating some fascinating ripple effects across different Austin neighborhoods. Let me show you exactly what's happening on the ground. This market shift is having different effects depending on location and property type. Downtown luxury towers are still seeing decent demand. Builders like the Independent and the Austonian continue to attract wealthy buyers who aren't as affected by interest rates. The lifestyle and amenities these buildings offer still have a lot of appeal to high net worth individuals. Meanwhile, suburban developments are facing much slower absorption rates. New home communities in places like Leander, Liberty Hill, and Pflugerville that were selling out phases in weeks are now seeing homes sit for months and months. To move properties, builders are offering significant incentives, including paid closing costs, free upgrades, and rate buydowns. In urban corridors, projects on South Lamar and in East Austin are having to adjust their strategies to navigate the market. The Sola mixed-use project, which plans 387 multifamily units alongside retail and office space, is revising pricing approach to align with current market conditions. Similarly, developments at East Austin are incorporating new components, with one example being the Bloom at Lamar Square project, which is including a mix of housing types to appeal to a broader market and help with absorption. I toured a new development in South Lamar last week where they've reduced prices by 5% and are offering a 2-1 buy down on the mortgage for the first 2 years. They're getting super creative to attract buyers in this new market reality. What we're seeing is a split between core urban areas, which are holding their value better, and outlying areas that are experiencing more significant price pressure. This neighborhood level difference creates both risk and opportunity depending on where you're looking to buy or sell. And that brings us to the million-dollar question. Where is Austin's market headed from here? Despite the cool down, this isn't a crash. It's a rebalancing towards a more normal, sustainable market. We're moving towards balance, not collapse. The days of 20% annual appreciation were never going to last, and this correction is actually healthy for our long-term market. Once mortgage rates moderate closer to 6%, which many analysts expect, we'll likely see seller confidence and price stability return. Austin's long-term fundamentals remain strong. The tech job market continues to grow, even if it's not at the frenzied pace of 21 to 22. Companies like Tesla, Oracle, and Samsung are still expanding their presence here, creating high-paying jobs that support housing demand. Population growth, while slower than during the pandemic peak, continues to outpace most major cities. The Austin Chamber of Commerce projects continued growth just at a more sustainable rate than the 20 to 22 boom years, and the development pipeline remains robust. New projects are still breaking ground across the city, showing that developers maintain confidence in Austin's long-term prospects. This means that we're likely experiencing a short-term correction rather than a fundamental market shift. Prices may continue to cool for another 6 to 12 months, especially in the outlying areas, but the core Austin market should stabilize and then resume modest appreciation. For buyers, this cooling period represents an opportunity to get into the market with less competition and more negotiating power. For sellers, it means adjusting expectations and focusing on proper pricing and preparation to stand out in a more competitive environment. Austin's market has shifted from hair on fire to a more balanced environment with cooling prices, rising inventory, and renewed buyer leverage. If you're thinking about making a move in Austin's changing market, my team and I would love to help you. We know these areas like the back of our hand and can match you with the perfect neighborhood for your needs and budget. Shoot me an email at hello@ssgaustin.com and let's get started. And if you enjoyed this video and want to learn about more Austin neighborhoods that are set to outperform the market, click right here for my neighborhood guide, where I can take you on a tour of Austin's suburbs set to explode in 2026. Thanks for hanging out with me. See you in the next one. Bye, y'all.